Hey guys, it's Steph. Welcome back to the Cantina. Please remember to tip the Wookiee bartender 20%. No droids, no bounty hunters, no Raylos, no Ray Nobodies. I've got to fix this. Just a second. I will be back. Okay, you guys, can you guys hear me? Okay, let me trade this out. All right, just a bit. Copy link. Hey gang, so I am back. I am here. I hope you can hear me. So, whatever. They should. Sometimes that happens. Okay, it's just something y'all gotta get used to because that's what they do. For a recap for yesterday, we had big news that Gina Carano is suing Lucasfilm, and it's a BFD, I think. We'll see what happens. We'll see where it goes, and we'll just, we'll hope for the best for her. And when you look at the documents, and I was a Hollywood Reporter. Hollywood Reporter actually had the lawsuit PDF, so I quickly made a bunch of screenshots, and she's got a case. In the fact that the nameless rabble at Lucasfilm that caused all this to begin with are manic, and I'm like freaking out manically. Says that they're terrified. Don't be surprised to see some of these people actually end up having to testify if this goes to trial. But like I said in my upload earlier today, I don't think this will ever see the inside of a courtroom. I foresee Bob Iger with a big grin on his face, welcoming Gina back with open arms and fixing what was broken. Okay, and if that happens, and we haven't gotten a announcement that Kennedy's leaving, this will be an indication that something has changed, because there's no way in hell Gina would come back for any reason if Kennedy was still in charge. Okay, so I think we're ready to go. All right. The Walt Disney Company's first quarter 2024 financial results conference call. Can you guys hear this? I hope so. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. I hope you guys can hear it. It's really loud. There will be an opportunity to ask questions. To ask a question, you may press star then 1 on your telephone keypad. To withdraw your question, please press star then 2. How old is this guy? Note, the operator, 5 years old? My God. I would now like to turn the conference over to Alessia Quajani, Executive Vice President, Investor Relations. Please go ahead. Right.
Good afternoon. It's my pleasure to welcome everybody to the Walt Disney Company's first quarter 2024 earnings call.
All right.
Our press release was issued about 25 minutes ago and is available on our website at www.disney.com.
I'll look at it after. That's important because that's basically what he's going to talk about.
And transcript, as well as the first quarter earnings presentation, will all be made available on our website.
She said she was fired.
Joining me for today's call,
it might have felt that way. I don't know. Let me turn this down.
Senior Executive Vice President and Chief Financial Officer.
Until they start talking about stuff. I think she's got quite a bit of ground. I looked at her legal. I looked at the lawsuit, and I was like,
thanks, Alexia. Good afternoon, everyone. Just 1 year ago,
here's Bob.
An ambitious plan to return to a period of sustained growth and shareholder value creation. And our strong performance this past quarter demonstrates we have turned the corner.
I should be drinking sherry. I have some. I have 2 different kinds.
As previously noted, we're focused on transitioning ESPN into the preeminent digital sports platform, building streaming into a profitable growth.
This is a big deal right here. He's talking about bundling with, I think, Paramount
Before we
and
dive deeper into our results,
HBO.
let me start by making a number of significant announcements that represent important and exciting steps forward. First, we announced yesterday the full suite of ESPN's channels will now be available direct to consumer as part of a new joint venture with Fox and Warner Brothers Discovery.
Oh, Fox and Warner
to create
Brothers
a new
Discovery.
streaming sports
Okay.
service launching this fall. This brings
Nelson
together
Peltz
content
called it.
from all of these companies' combined assets, including all the major professional sports leagues and college sports. And in the fall of 2025, we'll be offering ESPN as a standalone streaming option with innovative digital features, creating a one-stop sports destination unlike anything available in the marketplace today. ESPN is also adding a sports icon to its lineup, with Coach Nick Saban joining the network as an on-air commentator later this year.
Oh,
We're
yay.
excited to share that in November, we will release a feature-length animated sequel to Moana.
She has a
joins
legal
very robust
case.
lineup of upcoming
Okay,
films
I'm
and
sorry to
releases.
tell you that.
We're also thrilled to share that we're entering
And I'm sure
into
she'll
an
get her
exciting
job back
relationship
because
with Epic Games,
the guy we're supposed to be
acquiring a
listening
small
to,
equity stake and launching a groundbreaking new games and entertainment universe that brings together Disney's beloved brands and franchises with a hugely popular Fortnite. And I'm pleased to share that Disney's board has declared an additional dividend and will be embarking on a $3 billion stock buyback program in fiscal 24.
I don't know what that
and
means.
one more thing. Next month, Disney Plus will become the exclusive streaming home of Taylor Swift's historic concert film, Taylor Swift, The Eras Tour, Taylor's Version. I'll be sharing more with you about these announcements momentarily, but what's clear is that the important transformation we undertook last
There's
year
my
is bearing fruit.
feeling on
Looking at our
that.
results this quarter, we can say with confidence our strategy is working. In Q1,
That's a
segment
direct
operating
cut
income
to
increased
Nelson
by
Peltz.
27%,
Okay.
and adjusted earnings per share rose 23% compared to prior year. We've improved our entertainment streaming operating income by a remarkable 86% year over year, and remain poised to reach profitability in our combined streaming business by the end of fiscal 24.
Okay, this
And
is
build on
different.
our momentum to deliver significant,
Combined,
sustained
it used to be
profit margins
just
in the future.
Disney Plus.
Disney's
Okay.
Experiences business generated all-time records in revenue, operating income, and operating margin. And we are on track to meet or exceed $7.5 billion in cost savings as we continue
Well,
to
that's
look
good.
for further efficiency opportunities
That's good.
across the company. Diving deeper into our announcements, let's first talk about ESPN, which continues to deliver meaningfully for the company and will be a key value driver in the future.
This is actually kind of spinning it
ESPN's
off.
domestic sports business
In a way.
continues to grow, and even amid a challenging linear landscape, ESPN increased its overall audience in calendar year 2023, and it continues to break records in ratings. Ultimately, our mission is to make ESPN into the preeminent digital sports brand, reaching as many sports fans as possible and giving them even more ways to access the programming they love in whatever way best suits their needs.
Okay.
One way will be through the new streaming sports service coming this fall that we announced yesterday in conjunction with Fox and Warner Brothers Discovery.
This was a smart move
This
for
service
these
will bring
guys.
together our collective
That's a
portfolios of sports channels
that'll get a
and
lot of money for
direct-to-consumer
them.
services on a non-exclusive basis,
And
providing consumers with more of the sports they want in a single place. It's important for us to serve the needs of consumers looking for a seamless way to access an aggregated collection of sports-centric content,
okay.
including capturing fans moving away from the full cable and satellite bundle. And it's an attractive business proposition for ESPN, allowing us to command per-unit economics in line with established market rates for our sports content, just like we do with any streaming or linear service where we offer our programming. Another exciting option available to sports fans will come in the fall of
Options.
2025.
This is
We'll
smart.
make the full suite of ESPN
This is a really good
channels
business
available
move.
as a standalone
This is
and
a
highly
badass
interactive
business move, to
digital
be honest.
destination. Not only will consumers be able to stream their favorite live games and studio programming, they'll also have access to engaging digital integrations like ESPN Bet and Fantasy Sports, e-commerce features, and a deep array of sports stats, all of which we know will be incredibly compelling to younger sports fans in particular. It will also have very robust personalization features. ESPN has long prioritized its
You
desire
can see him
and
reading
ability
this with his
to
glasses
serve
like
sports
this.
fans wherever they are, and these steps will strengthen ESPN's ability to deliver on that promise.
Hi.
And as you know, we've also engaged in productive conversations with potential content and marketing partners for ESPN. We've made progress towards securing deals, and we expect to have more to share with you in the near future.
This is a big
We're excited
deal.
to offer a more unified streaming experience, which we expect will deliver strong benefits in terms of higher engagement, lower churn, and greater advertising potential. When we launch our standalone ESPN service, we'll also make it available on Disney Plus for bundle subscribers, just as we've done for Hulu. We've already seen an incredible response to the beta launch of Hulu on Disney Plus, which has far exceeded every metric, and we are looking forward to the full launch next month.
Jacob, I don't have a
This is all
sports
part of
team
the ambitious
anymore.
streaming strategy
I mean, I don't.
from our acquisition of
I used to be the
21st
biggest
Century
football
Fox
fan
to
you ever
expand
saw. I
our
was
vast
a
content
huge Packer
library
fan.
and strong pool of creative
You know,
talent,
kneeling
to
for the
launch of
national
Disney
anthem.
Plus as the home to a century
And
of
I,
content,
as a Marine Corps
securing
colonel's
full
wife,
control of Hulu,
am supposed
and
to
expanding our streaming offerings to reach
get
greater
going, guys.
audiences.
It doesn't
Through our
work for
significant
me.
investments in technology, and now taking significant steps toward ESPN's streaming future.
They used to hate the
Disney
Packers
also
too,
has a great
Jacob.
advertising story to
Maybe they
tell,
still do,
with
I don't know.
unparalleled scale and very strong advertising technology, and our ad-supported Disney Plus offering is off to a great start. We successfully expanded outside the U.S. with launches in EMEA and Canada, and grew to over 1,000 global advertisers in the first quarter. That's a tenfold increase from launch. More than anything, the success of our streaming services is a testament to the amazing content we create. With 6 of the top 10 most streamed movies across all streaming platforms in the U.S. in 2023.
That's
our
actually,
best-in-class storytelling continues to entertain millions of people.
here, this is where we're getting into it.
We received 27 Golden Globe nominations and won top prizes for FX's The Bear and Searchlight's Poor Things. At this year's Primetime Emmy Awards, we took home 37 wins, more than any other entertainment company, and we lead the industry with 20 nominations heading into the Oscars, which will air on March 10th on ABC.
I'm sorry, I'm not going to watch it.
We're also proud of our recent Disney-branded programming successes. Percy Jackson and the Olympians, which premiered on both Disney Plus and Hulu in December, has become a bona fide hit. Books from the series returned to the #1 slot on the New York Times bestseller list following the debut of the Disney Plus series.
Yep.
And I'm thrilled to share that we just picked up a second season. And the hit children's animated series Bluey, which is exclusive to the Disney Channel and Disney Plus in the United States, was recently the #1 most streamed show across any streaming platform.
All right.
Looking ahead, we have an exciting slate of originals coming to Disney Plus, including Agatha from Marvel Studios, Skeleton Crew and the Acolyte from Lucasfilm, Win or Lose from Pixar, and much more.
Why did he mention the Acolyte?
Additionally, later this month, Hulu will launch FX's
I don't know how that's going to be.
saga Shogun in the U.S., and in March,
I gotta talk to Cameron about this.
#1 streamed title globally will join our extensive library of titles on Hulu. When the show returns next month for its 20th season,
they've got to
Hulu
be
will
doing
the
like
only
a.
place to see the current and all previous seasons.
Favreau had to have probably taken it and done something with it.
And speaking of icons, over the past year, we've all witnessed the creative genius and sheer power of a true cultural phenomenon, Taylor Swift. When her blockbuster concert film debuts on Disney Plus on March 15th, it will feature the concert in its entirety, including the song Cardigan and 4 additional acoustic songs, which were not in the theatrical or digital purchase release of the film.
Oh.
We know audiences are going to absolutely love the chance to relive the electrifying Taylor Swift Eras Tour, Taylor's version, whenever they want on Disney Plus. Turning to our film studios, we have an incredibly robust slate of new releases as we continue revitalizing our creativity.
Well, that's the thing, though. They don't have enough for a show. So I am like,
2026. This year,
You
we
know.
have Kingdom of the Planet of the Apes, Inside Out 2, Deadpool 3, Alien Romulus, and Mufasa, the Lion King. As I mentioned at the top of the call, this November we'll release a feature-length animated sequel to Moana. This was originally developed as a series, but we were impressed with what we saw, and we knew it deserved a theatrical release. The original Moana film from 2016 recently crossed 1 billion hours streamed on Disney Plus and was the most streamed movie of 2023 on any platform in the U.S. Along with the live-action version of the original film that's currently in development, Moana remains an incredibly popular franchise, and we can't wait to give you more of Moana and Maui when Moana 2 comes to theaters this November. Looking to our 2025 theatrical slate, we're excited to bring audiences Captain America: Brave New World, Fantastic Four, Pixar's Elio, Zootopia 2, and Avatar 3. And we're already looking forward to 2026 and beyond with Frozen 3, the first Toy Story movie since 2019, and a new Star Wars movie that brings The Mandalorian and Grogu to the big screen for the very first time. These films will not only reach global audiences in theaters, but as we've consistently demonstrated, they will become important anchors on our global streaming platforms, driving subscriptions and engagement, while also continuing to fuel growth in our experiences business. After all, one of the things that truly sets Disney apart is our unique ability to turn top quality IP into top quality experiences, leading to significant growth. That was certainly true.
Did he mean the Acolyte or did he mean
Every one of our
Andor?
parks was profitable.
He didn't mention
in Q1,
Andor at all.
giving us an incredibly solid foundation to build upon as we invest significantly to turbocharge growth in this business. We've had a tremendous response from guests visiting our newly opened World of Frozen at Hong Kong Disneyland, as well as our first ever Zootopia Land at Shanghai Disney Resort. And as I've said before, we also have so many untapped stories just waiting to be brought to life in our parks across the globe as we continue to invest in this extraordinary business. But it's not just our parks where we're creating new opportunities for consumers to engage with the characters and franchises they love. Our new relationship with Epic Games will create a transformational games and entertainment universe that integrates Disney's world-class storytelling into Epic's cultural phenomenon Fortnite, enabling consumers to play, watch, create, and shop for both digital and physical goods. This marks Disney's biggest entry ever into the world of video games and offers significant opportunities for growth and expansion. The new immersive universe will allow fans to unleash their own creativity and experience the Disney stories and worlds that they love in groundbreaking new ways. Younger audiences in particular are huge consumers of video games. In fact, among millennials, Gen Z, and Gen Alpha, a significant amount of time spent on screen-based platforms is playing video games. This new universe from Disney and Epic provides us with a tremendous opportunity to not only meet more consumers where they are, but to allow more audiences.
I would agree,
to
Rollo.
with Disney's iconic brands and franchises, including Marvel, Star Wars, and much more. Looking at the renewed strength of our businesses this quarter, from sports to entertainment to experiences, the stage is now set for significant growth and success. In that regard, we see ample opportunity to increase shareholder returns as our earnings and
The trolls are back.
continue to grow. Our current position of strength and confidence in our path ahead already led us to pay a dividend to our shareholders last month. And I'm pleased to share that the board declared that our next semi-annual dividend, to be paid in July, will be 50% higher versus the last dividend paid in January. The board has also authorized the company to begin repurchasing shares for the first time since fiscal 2018, and we plan to start by
Boy,
targeting
Pablo's
$3 billion
Pablo's
this fiscal year.
fucking
As we continue to
busy.
invest in our growth businesses and maintain our strong balance sheet, we also expect to prioritize dividend payments and share repurchases in the coming years. I'm proud of our company's remarkable achievements, and I'm grateful to a deep bench of seasoned executives who are helping guide Disney into the future. And that includes Hugh Johnston, our new CFO, who has already proven to be an outstanding addition to the team. We feel very fortunate to have Hugh with us. And now to take you through more of our results this quarter, I'll turn things over to Hugh.
Thanks, Bob. I joined Disney a little over 2 months ago, and the more I learn about this incredible company, the more excited I am about the opportunities ahead of us. I'm looking forward to continuing to partner with Bob and our management team as we execute on our strategy with a goal of delivering significant, consistent, long-term earnings and free cash flow growth. We are very pleased with this quarter's financial results. Fiscal first quarter diluted earnings per share, excluding certain items, increased by 23% versus the prior year to $1.22, and segment operating margin increased by 350 basis points, reflecting both strong pricing and operating expense reductions. Both revenue and operating income at direct-to-consumer, domestic ESPN, and experiences all increased versus the prior year, and operating income across each of our business segments grew nicely, in part due to the diligent and ongoing cost efficiency work we're driving throughout our businesses, as evidenced by the realization of over $500 million in SG&A and other operating expense savings across the enterprise in the first quarter. Moving to our results by segment. At Entertainment, first quarter operating income more than doubled, driven by significant improvement at direct-to-consumer. Entertainment direct-to-consumer operating income improved by about $850 million versus the prior year, and by nearly $300 million versus Q4. And revenue increased sequentially by over 10%, benefiting from higher subscription
That's
and
a pretty
advertising.
good number.
Operating income in the first quarter was better than the guidance the company gave in the last earnings call.
Watch this guy.
Primarily due to expense favorability. Hulu subscribers increased by 1.2 million from Q4 to Q1, and Disney Plus core subscribers decreased sequentially by 1.3 million, in line with prior guidance, driven by the expected temporary uptick in churn given the recent domestic price increase.
Diana, go fuck yourself with
a
a spiked dildo.
Those impacts were partially offset by strong ad tier net adds due to domestic growth as well as the launch in certain international markets in the first quarter. Domestically, we saw continued net additions to our bundled offerings in Q1, which, as a reminder, have significantly lower churn versus our standalone products.
Pablo,
Disney
you're
Plus
losing.
core
Let it go.
ARPU
Go away.
Increased by 14 cents versus the prior quarter and by $1.07 versus the prior year, driven primarily by price increases. We expect Disney Plus core ARPU to increase in the second quarter due to the continued benefit of price increases, which should only be partially offset by the impact of adding Charter's Spectrum TV Select subs to the Disney Plus ad tier. I'll note that we are being paid on all entitled Charter subs, which will also be a key driver of accelerated Disney Plus core sub growth in Q2. We expect net adds of between 5.5 and 6 million in the second quarter. Domestic net adds are expected to be in the 7.5 million range, driven by Charter entitlements, net of cannibalization. And international core subs are expected to decrease modestly, reflecting changes to certain wholesale deals and slightly elevated churn impacts from price increases. While subscriber growth will vary from quarter to quarter, we are confident in our prospects for ongoing sub growth over the longer term, driven by the continued global strength of our content slate, advancing our paid sharing efforts, technology advances that are intended to improve our content promotion and discovery capabilities, drive up engagement, and lower churn, the impact of making Hulu content available
There he goes.
for bundle subs, and continued adoption of the bundle domestically.
Minute Fairy, we don't tolerate
and lower churn.
trolls, so
A
watch
strategy
yourself.
We will repeat in Latin America this summer when we combine Disney Plus and Star Plus. And our continued use of tiering to provide subscribers with more choices. As it relates to the opportunity we see on paid sharing, beginning this summer, Disney Plus accounts suspected of improper sharing will be presented with new capabilities to allow their
No, but
followers
you
to
will
start
be if you
their
keep
own
bugging me.
subscriptions. Later this calendar year, account holders who want to allow access to individuals from outside their household will be able to add them to their accounts for an additional fee. While we are still in the early days and don't expect notable benefits from these paid sharing initiatives until the back half of calendar
Kojak!
2024, we want to reach as large an audience as possible with our outstanding content, and we're looking forward to rolling out this new functionality to improve the overall customer experience and grow our subscriber base. For
Come here.
Q2, we are
Come here,
expecting revenue at entertainment DTC to
Good
grow
boy.
sequentially, and
Good boy.
anticipate that operating
Big monster
losses
dog.
will be relatively in line with the first quarter.
You're welcome, Mike.
We still expect to reach profitability at our combined streaming businesses in
Come here, sweetie.
Q4 of fiscal 2024.
Daddy's home
and
with
have never
dinner.
been more confident about our path to creating a strong and sustainable streaming business with growing subscribers over the long term and ultimately double-digit operating margins, a business which we fully expect to be a key earnings growth driver for the company. Moving on to entertainment linear networks, the decrease in the first quarter operating income versus the prior year was due to lower advertising and affiliate revenues, partially offset by lower programming and production costs. Lower domestic advertising revenue was driven primarily by lower impressions, including from strike-related impacts, in addition to an adverse comparison to the prior year's midterm-related political advertising at our own station. Domestic entertainment affiliate revenue was 5%
Sorry, guys.
versus the prior year, and a 5-point benefit from higher rates was more than offset by a 10-point decline from fewer subscribers. Adjusted for the
Rudy.
non-recurring certainly have worked harder. As a result of our recent deal, the sub-decline impact was closer to 7%. Lower programming and production costs benefited from strike-related impacts, and we also remain focused on driving ongoing cost efficiencies. At content sales, licensing, and other, results came in lower versus the prior year and below the guidance we provided due to the performance of theatrical titles in the quarter. We do not have any new key theatrical releases in Q2 due to production delays stemming from the strike, and expect content sales, licensing, and other operating income to come in roughly break even for the quarter. Sports operating income improved versus the prior year due to strength at ESPN, partially offset by lower results at Star India, driven by higher rights costs during of the ICC Cricket World Cup. At domestic ESPN, year-over-year growth was driven largely by a decrease in programming and production costs from the timing of college football playoff games. Domestic affiliate revenue in Q1 was comparable to the prior year, as an increase of 6% from higher contractual rates was offset by a commensurate decrease from fewer subscribers. ESPN domestic ad sales in the quarter were down 2% versus the prior year, but up mid-single digits when adjusted for various timing shifts and one-time impacts. The strength we are seeing gives us confidence that leaning into sports will continue to create value for our shareholders. Second quarter to date, we are seeing continued healthy advertising demand in the sports marketplace.
Of course you do.
Domestic ESPN
It's the only thing anybody wants to watch.
Double-digit percentage points versus the prior year. The trend is still solid even when adjusted for the CFP timing shift of an additional game as well as an extra NFL divisional game in Q2 this year. Our experiences business posted strong Q1 results with year-over-year operating income growth of 10% at Parks and Experiences and 4% at Consumer Products. Record-setting results this quarter were primarily driven by our performance at Shanghai and Hong Kong theme parks.
Yeah, Cross, I made you a mod.
At Disney Cruise Line.
You're welcome.
And the success of Marvel's Spider-Man 2 at our
I figured just some other guy needed help.
And segment margins expanded by over 50 basis points versus the prior year. an achievement delivered despite tough comparisons at Walt Disney World coming off its highly successful 50th anniversary celebration in the prior year and significant cost pressures driven by wage increases. We remain optimistic about the segment's continued top line and profit growth, notwithstanding the tough comps domestically in Q2, and we still expect robust OI growth at Experiences for the full year. We plan to invest approximately $60 billion into the business over the next 10 years, of which approximately 70% is earmarked for incremental capacity expanding investments around the globe, which we expect to generate attractive returns.
Well, it sounds like
On
ESPN
a
is
full
pulling
company
its
basis, as Bob
pulling its
mentioned earlier,
weights.
we are still on pace to meet or exceed our $7.5 billion annualized cost target by the end of fiscal 2024. I'm pleased with how this is tracking so far. Total expenses in Q1 were down 4% versus the prior year, and the efficiencies we've been realizing are a key contributor to that progress. And we are also still on track to generate about $8 billion in free cash flow this fiscal year. Putting all this together, we are confident in the progress we are making and the path it puts us on to become a strong cash generator and earnings compounder starting in fiscal 2024. To that end, we expect full year fiscal 2024 earnings per share, excluding certain items, to increase by at least 20% versus
Though I think if
2023
they're cash
to
poor,
approximately $4.60.
that they need probably
You already heard from
to spin it
Bob
off
about
or
our
something.
updated plans for shareholder returns this year. And as he mentioned, we intend to continue investing in our growth businesses.
I don't
while
do
also
shout outs
maintaining a balanced and disciplined approach to capital allocation.
for people I don't know.
And with that, we're happy to take your questions.
Thank you. As we transition to the Q&A, we ask that you please try to limit yourself to one
Thanks,
question in order to help us get to as many analysts as possible today. And with that, operator, we're ready for the first question.
Good.
You. And as a reminder,
What a great
if you'd like to
voice.
ask a
She
question,
sounds like a
please press
5-year-old.
star then one on your telephone
Thanks, you. Can I
keypad.
have a lollipop?
If at any time your question has been addressed and you'd like to withdraw your question, please press star then two. Today's first question comes from Ben Swinburne with Morgan Stanley. Please go ahead.
Thank you.
Thanks,
Good
Cross.
afternoon. You guys had a lot of news for us to chew on tonight. I wanted to maybe start, Bob, to asking you about sports, since you led with that. You guys have a lot going on with ESPN, new channels package, flagship, having conversations. Can you kind of put it all into context for us and how you're sort of thinking about these different
They'll ask
products
3 to 5
and whether they
questions.
address different parts
They
of
should
the
be over
market?
by
What
5:30.
your sort of priorities are between the two, and really what is success for Disney shareholders in sports? How do we think about that kind of financially and strategically? And I was just wondering if Hugh had an update for us on expense growth this year. I think you guys guided to slight growth overall in 24 last quarter. Seems like you're on track with your savings program, so any update to that would be appreciated. Thanks so much.
Thanks, Ben.
Yep, you're right.
Forgive me to throw a couple
Cross.
of cliches your way, but as you know, ESPN has always aimed to serve the sports fan effectively, no matter where the sports fan is. And so all of the steps that we've been taking,
I
and that
think
we
what's going on with
today
Gina
and will continue to take, are aimed at
and
doing
the
just
fact
that.
that
And when you think about
I'm over the
today's
target with
environment,
Pablo,
where you obviously got some challenges with linear TV,
you
a
know,
lot more competition.
he needs to
both
stop
for people's
talking
time
about
and
things to people
specifically
he
in
really
sports.
doesn't
You
know.
think about the fact that
And
ESPN finished 23 in
talking
really
to
good shape.
reporters about a
Ratings
movie that's not
continue to
happening.
rise. Sports is still
Talking
an advertiser's
to
delight. You have to consider that ESPN has been successful
people
in
about a
what their primary
lawsuit
goal was. They're reaching sports
he
fans
could
in
easily
mass,
be deposed
which is why
on
advertisers and
is
distributors
stupid.
and sports leagues and
And
organizations feel
it hurts
they have to kind of be part of
the
or partners with
organization.
ESPN. As we look to the future, we're obviously mindful of one, the
No,
state
he's a
of the
troll.
multi-channel
That's all.
ecosystem.
Mike is a troll. That's all he
Two,
does.
where people
He's
are
a
spending
bully.
their time and their money with media, and you have to basically serve them effectively there. We've been saying for a long time that taking ESPN
Oh, I think it
in a
already has,
consumer
Cross.
direction was inevitable, and that we were looking for partners to do so. This is really not a first step, it's a second step. The first step was launching ESPN Plus, some years ago, which has actually been quite successful. The second step is finding these partners to distribute basically the equivalent of a multi-channel sports-centric
You're right,
tier,
just some other guy.
via app. So one, we're serving sports fans well. Two, we're doing it with partners. Three, we're doing it
Person
in
you
a
would
more
walk by is
modern
my
way,
husband, by the way.
rather than cable and satellite in this case. It's app-based. And that's a big step for us because we know that there are a number of people who have never signed up for multi-channel television. This gives them a chance to do so at a price point that will be obviously more attractive than the big fat bundle. Two, there are people who have left that ecosystem because they didn't want all those channels or that cost. And this is a way of basically preserving a relationship or creating one with those that are no longer part of the multi-channel ecosystem. The next step after this, and we announced today that we'll launch it probably August of 25, is to bring out ESPN Flagship. I say on its own, but it will be bundled ultimately with Hulu and Disney Plus, and that will be a very, very immersive, very obviously sports-centric app, which will have features that this combination with Fox and with Turner, Time Warner, Discovery will not have, such as integrated betting, integrated fantasy.
Yeah, of course it still has
likely
the
to have
emails.
some sales arm or merchandise capabilities, obviously deep dive into stats, and high degree of customization and personalization. Again, another kind of feature that we'll bring out to engage with sports fans. I can't tell you right now how that ultimately will fit into all of this, except it will be a progression. We haven't really talked.
Oh yeah, hey Maze, how you doing?
Further, how it will be bundled, except with our own services. But I think success will be for us in this basically migration would be to maintain ESPN's position in sports in general and the affinity that its fans have with ESPN and the attractiveness of ESPN to advertisers in sports leagues. That's simple.
Well,
Right.
those
I'll
emails,
take the
if it
cost
goes to
side of
trial,
it.
will be
You're right. In the past, we've talked
Public
about slight growth in
documents
operating
then.
expenses year over year. We obviously have terrific momentum on cost management coming out of the first quarter, and the team is relentlessly looking for further opportunities to drive cost savings, both to reinvest back in the business to continue the growth momentum that we have, as well as deliver margin growth to the bottom line. Net, no change in guidance versus what we said previously. We should do at least as well as the guidance we previously committed to, which was slight growth in operating expenses year over year.
Thanks, Ben. Operator, next question, please.
Absolutely. Our next question today comes from Michael Nathanson with MoffettNathanson. Please go ahead.
Thanks. One for you, Bob, one for you. Bob, you asked the best questions.
I know.
Kind of wondering, how does Hulu Live fit into the long-term picture here? Right?
Hulu
It's stopped growing. YouTube is
Okay.
twice the size. When you think about the future of your offering,
I had to buy
how does that
Hulu
fit into what you
because
just announced with,
there's a show I
Disney
want to
Plus,
watch,
ESPN, and then Sports Point.
and
And then
it's
for
on
you,
at 10 o'clock tonight on
you brought some
Hulu,
news too with
and I'm
double-digit
gonna stay up to
margin
watch
targets
that.
for streaming. Any
hate-
help on a timetable that gets us there?
I
Or
hate
what factors do you
ads.
think will drive you?
So I
from
bought
studio
Hulu
to
till the
double
show's
digits?
over, and then I'll get rid of it.
Thanks.
As you know, Hulu Live is, more reflects the bigger, fatter bundle of television channels. Like many of the other services that are out there, it just happens to be integrated or attached to Hulu if you subscribe to it. So this, in a way, I guess you'd argue, competes with Hulu Live directly, but it doesn't compete with Hulu because this will be bundled with Hulu.
Yep.
So if you're a Hulu subscriber,
I
and you
have a
wanna
theory
get this
on
new
that,
sports
Mike.
service, you can buy
When these
that
guys
as
are
an
done,
add-on
I'll tell
to
you what
Hulu.
it is.
And as we see it, that's a real
There's something
positive
definitely
because
going
if you
on
consider
that's
the fact
bigger
that Disney
than
Plus and
board
Hulu
seats.
will be together once we come out of beta in March. We're already together in beta. And then you add a
I
sports
think I
feature
can do it.
with
I
so
just
many
got to figure
sports that
out
this new joint
when.
venture, will offer. That's very, very compelling in terms of reducing churn. for Hulu and
I haven't talked to him
engagement.
about it in a while,
So
but
we
I
look at
will.
this as a huge positive for Hulu. And, we're realistic about Hulu Live in terms of the impact this could have, but that, Hulu Live is certainly a nice, important feature of our Hulu business, but the critical part of that business is Hulu itself.
And Michael, I'll take
This
the
is great, you
question
guys.
on DTC profitability and double
Mazer
digits.
is here.
Yeah, it's for the first
All we
time
need
we
is
put
Dave
out
Pensack,
that
and I've got
our
in
objective is
Mexican
to
Iron
get
Man
to double-digit margins.
and Corey on,
In
and I've
some ways,
got
that probably shouldn't be a
VA
surprise
team.
to investors because the goal has always been to build what I would characterize as a good business. What does a good business look like? Number one, it's got growing subscribers, and
Yeah.
number two, it has attractive margins, which we're defining
Fuck you,
in double
Elijah.
digits. So I know in a sense it's news, but in a sense it shouldn't be news because we've always wanted to build a good business in that regard. In terms of how we get there, it's really in many ways the way that we've gotten from where we were to the point we're at right now. Number one, we're going to grow subscribers. Number two, you'll see some level of pricing, and both of those things will probably be similar to what you've seen over the last couple of years. Maybe a slightly different balance, but roughly similar. And then we'll
Okay.
actually get some leverage out of.
Oh,
marketing
he's been
spend,
good from what
content,
I've
and
heard.
Technology spend. All of those will grow a little bit less, at a lesser rate.
I mean, I haven't talked to Mike in a while,
Than
but
the rate of revenue growth.
I gotta
In
do.
terms of the specifics on how do we get there with
I gotta send him a text.
sub growth, I think it'll be a couple of things. Number one, paid sharing is an opportunity for us. It's one that our competitor is obviously
Oh, I hope I
taking
didn't hit
advantage
it.
of and one that sits in front of us. And we've got
Cross
some
and I
very
hit that
specific
button at the
actions that
same
we're taking
time.
in the next couple of months, which I discussed earlier, which will benefit us to some degree in the back half of this year and very much next year. Number two, we'll see lower churn with the bundles that we're looking to put out. Number three, international remains a growth opportunity for us. So if you put all of those pieces together, it's kind of doing a lot of what we've been doing with maybe some slightly different tactics to get to a level that, again, we would characterize as a good business.
Yeah,
Not
I
gonna put a
think so.
specific
Just some
time
other
frame
guy.
on that right now. Some of that is going to be driven
No.
by the marketplace. Just know that we feel a sense of urgency in getting there, and that's probably the way we're going to operate the business. We'll feel urgency, but only to get to a good, sustainable business.
Didn't we already block her already?
Operator, next question, please.
Thank you.
All right, next question today comes from Jessica Reeve Ehrlich with Bank of America Securities.
Thank you. Thank you. You guys covered so much ground tonight. So I have one question and two follow-ups. You announced, or you, for the first time I've heard you say this, that in parks.
I always love it when
70%
these
of the
assholes
$60 billion
accuse me
in
of
CapEx
smoking.
That you outlined over the next 10 years. That 70% of that will go to incremental capacity, so like over $40 billion in new parks and attractions. Can you give us some color on timing and location? There's been speculation that you may open a fifth gate in Florida. And then just a follow-up to a couple things you said. One, unpaid sharing crackdown, which came up twice. Have you sized?
Oh, I
the
know
number
I
of
don't, and I'm
borrowers?
not gonna.
And on the sports JV, how do you plan to attract non-pay TV subs to what sounds like it might be an expensive sports service without a significant decrease in traditional pay TV subs who would actually save money? Like, how do you not cannibalize?
Okay, you asked a lot of questions on a lot of different subjects. I'll take the first one on parks, timing, and location.
Guys are
We're
wasting your
already hard at
time
work at,
trolling.
basically, determining where we're going to place
Hank,
our
maybe you
new
should go find
investments
something
and
else to
what they will
do.
be. You can pretty much conclude that they'll be all over, meaning every single one of our locations will be the beneficiary of increased investment and thus increased capacity, including on the high seas, where we're currently building 3 more ships. And,
3 more?
in a business that is obviously extremely
Obviously, the
profitable to us,
hospitality
and look
business
expansively, at least in the next
is doing
decade,
well.
in that direction. I'm not going to really give you much more of a sense of timing, except
I know,
that
it's-
we're hard at work at
Pablo's
getting
so
these
mad
things,
at me.
basically conceived and built. And we've
Good.
got a menu of things that will
Good.
basically start opening
Be
in
mad.
25, and there'll be a cadence every year of additional investment and increased capacity. I'll let you take care of the paid sharing here.
Yeah.
On the sports service and the pricing, I think the way you have to look at it is the sports service is going to be substantially less expensive to consumers than the big bundle that they'd have to buy to get those same channels on cable and satellite. And again, designed for
yeah.
2 things. One, we believe there are a number of sports fans out there that want to watch sports on television, but didn't want to sign up to the big, cable and satellite bundle. And so we think they will be accretive to us. We also believe that either consumers have left the bundle because it wasn't serving them well, or they may leave the bundle, and we want to make sure that we grab them too. So we view this whole thing as one, being a good proposition for sports fans because of the cost, and certainly being positive for us because of the dynamics in the marketplace right now.
Okay, and Jessica, I'll handle the page sharing question. We have sized it. I don't want
They're
to put
both
a
in the
specific
same
number
office.
out there right now because these numbers are obviously rough estimates anyway. Suffice
So
to
they're
say
like
that
doing
the
this.
opportunity that we see on a percentage basis probably isn't all that dramatically different from what our competitors.
Yeah, well, Pablo's
have done
almost
in terms of their
50, and he's
subscriber
old
base.
too.
In terms of getting at it,
And if
there's a couple
you've ever
of
seen his
actions
wife,
that we've taken in order
she
to do
looks
that.
older than I
Number
do.
one, we have some
And she's proud of that.
user language that we have in the U.S., Canada,
That's
and
fucked
in
up.
certain markets, so that we'll actually have the opportunity to act on the paid sharing opportunity. Number two, the accounts that we think are doing unpaid sharing right now will get communication this summer, and we'll give them opportunities to allow their borrowers to start new subscriptions. And then later this year, we'll actually also have account holders who want to allow further individuals to access their account from outside the household. They'll be able to access
I think
the
they know
account,
that,
but they'll be able to do
Mike.
so for an additional fee. So we've got
I don't go on
tactical
cruises because I don't want to
actions
get
take in
sick.
order to take advantage of what
Every
we think
time
is
someone goes on a
pretty good
cruise,
sized opportunity
they
in
end
front
up
of us, and
sick.
it's one of the
It's
things
like,
that gives us
I ain't doing it.
confidence in our subscriber growth numbers.
Thank you. Operator, next question, please.
Okay, I thought there'd only be
Next question
3.
comes from Stephen K.
We're kind of almost.
Please go ahead.
Well, we got about 15
Thank you.
minutes left.
So Bob, you mentioned a lot of content in your remarks. It seems like the operations are really starting to hum again, but I think the lifeblood of the company is always going to be the studio output.
Yeah, I think
so
this
much
guy needs to be
culture. I think that's
reported.
an area you've said that you've been spending a lot of time on. Do you feel like the content is also now turning the corner, like you've seen in the operations? And if so, when do you think we might see some of the results of that renewed focus on the studio output? And then, Hugh, I think the inevitable question with the buyback announcement is what you expect you might end up ultimately paying for Hulu. Just wondering if you have any sense on the timing of that outcome or situation. And related to that,
These people are like 5 years
$7.5 billion
old.
in savings was a bit new. Curious
I
if
don't-
you found
this
those
is not
extra
a
buckets
kid's
of cost savings. Thank you.
Channel, and I make
Stephen, I
that
feel
very.
great about where we are with the studio. Let's not lose sight of the fact that in the last year, the studio had some real success. Not to suggest that we didn't have some films that were not successful that we were really disappointed in, but we also had some great success too. The Guardian sequel and Avatar at the end of calendar 22, but part of fiscal 23. One of the things that I
Oh, they
think
probably
before
look.
is that
If this is what I think it
sometimes
is,
can be, detrimental
he's
to
got
quality, and
he's got a
our
network
deal to,
that he
greatly
works with.
increase
Okay,
volume,
this is
partially tied to
he's trying to do to me
more
what he
global
did to
subs for
Gina.
our streaming platform. Some of our studios lost a little focus, so the first step that we've taken is that we've reduced volume. We've reduced
Okay, thank
output,
you.
particularly at Marvel. When you fix or when you address these issues with
He'll probably talk to Sparrow again, or not. I don't know. I mean, the Acolyte is a weird thing, and I don't know everything because he didn't want to tell me everything, and I don't blame him. And other people weren't too enthusiastic about sharing more than what we already know, because it's kind of not
on the television side, Jimmy Pitaro at ESPN. And the partnership that Alan and I have is a strong one, and we believe that the time that I'm now devoting to this and the attention.
The good thing is he mentioned Grogu and Mando.
We're very bullish about
Okay,
the films coming
so
out. We mentioned Inside Out 2.
and no
we
Ray
talked about
movie.
Deadpool,
R-A-Y,
and the Planet of the
Ray,
Apes film.
like a guy.
We feel good about that. Obviously, the end of the calendar year, we've got Mufasa, prequel to Lion King. We are very excited.
I actually kind of want to see that.
Which is was the number one stream movie of all across all streamers in the U.S. in 23, and is at over 1 billion hours of consumption on Disney Plus. And that's now going to be released in November. And then I mentioned what we're doing after that. I'd say we're leaning a little bit more into sequels and franchises, some that we feel great about, like Toy Story, as a for instance. Obviously, Star Wars, Avatar, we've talked about. Marvel is starting to focus on some of its stronger franchises going forward, but
Good.
I'll leave it at that. And I think given the environment and given what it takes to get people out of their homes to see a film, doing that, leaning on franchises that are familiar, is actually a smart thing. So we've got work to do still. We're not resting on our laurels or sitting on our hands. We're working hard at it, but I feel quite
He
good
must
about
not have
the
anything to
trajectory.
do.
Right, and Steve, from my perspective, regarding
Of course, he's been
Hulu's
shut
time on
out,
that,
so.
we've got a pretty clearly defined process.
And it's
That
nobody's,
process is gonna
it's
take a
everybody
little bit
else's
of time
fault but
based on
his.
the work that needs to go into
You know.
valuing the business. I would expect before we get.
I've
to
only
the
been on
issue
for
that we should have
50
this,
minutes.
Figured out and closed. Regarding cost savings, it's pretty well spread out across the board. One of the things you tend to find is when a company goes on a cost effort, once you start to build momentum on that, people tend to find additional opportunities, and that's what gives us the confidence around the numbers to at least meet, if not exceed them. So no one specific area. It's content side as well as SG&A side. And I think we just have momentum.
This thing will be over pretty soon, and then I'll give you my theory on Elon. And
Thank you. Operator, next question, please.
we're getting
All right,
close.
question today comes from Brian Kraft with Deutsche Bank. Please go ahead.
See, they're not gonna let
Oh, hi,
people
good
like you and me
afternoon.
talk.
Since there's so much discussion
Wow,
about
yell
content
louder.
and distribution, I was wondering if I could ask you if you could share any observations related to Charter integrating Disney Plus into its pay TV programming.
I don't know. I think a
Hearing
lot of
people
it
say
was
how,
creative.
percentage of customers actually using it, or
He didn't
engagement
mention
level
Ahsoka
relative
too.
to the average Disney
He didn't
Plus
mention the Ray
subscriber.
movie, but he
And
mentioned
maybe
Mando
lastly, do you think this is a model that you'd like to
and
replicate with other pay TV distributors
Skeleton
over
Crew.
time as your agreements come up for renewal? Thanks.
Thanks, Brian. It's really early. They didn't start introducing this to their subscribers really until January, and they didn't roll it all out right away. And so we're seeing some stats on this that are somewhat encouraging, but I want to be careful that, that because it's early, we're not sure whether those trends will continue or not. I do think that this kind of arrangement is one that we'll likely see with other multi-channel distributors. It seemed like it was a win-win for both of us. Important to us, obviously, because it gives us access to more of their customers, and important to them in terms of bundling this service with their multi-channel customers. So I think it's, again, I think you'll see more in this direction, but too early yet. We may have more to say about this next quarter when we know a lot more.
Thank you.
Operator, we have time for one more question.
Thank you. And our final question today comes from Michael Morris with Guggenheim. Please go ahead.
Wow. These are some
Thank
heavy
you.
hitters
Good
today.
afternoon. One follow-up on the sports JV first, and that's how did you get comfortable that the availability of the service won't drive accelerated cord cutting and become an economic drag on your business and the business more broadly? And how do you expect this to impact?
Yeah,
the
if Pablo is
renewal
trying to do to
discussions
me
with
what
your
he did to,
distribution partners? That's my first. And then my second, Bob, you've seen several iterations of the video game strategy during your tenure. Can you talk a little bit more about why this investment in Epic Games is the right move for you here, and what a product might look like, and when that may come to market? Thank you.
Sure. Let me take the second part of the question first. Yes, you're right. We've tried our hand at video games in a number of different directions. And actually, the one that ended up being the most successful for us was the license. And in fact, we've licensed, I think, $9 billion franchises, including the Spider-Man franchise, which is the most successful video game last year. After I came back, I sat down with Josh D'Amaro, who runs our experiences business, and his executive, who actually manages games, Sean Choctaw. And one of the things they showed me, actually, the first thing they showed me were demographic trends. And when I saw Gen Z and Gen Alpha and even millennials, and I saw the amount of time they were spending in terms of their total media screen time on video games, it was stunning to me, equal to what they spend on TV and movies. And the conclusion I reached was we have to be there, and we have to be there as soon as we possibly can.
Yeah, I think Boxing Life is right there. I think he's right.
Fortnite, that there was already success when some of our characters and franchises were expressed or showed up in Fortnite. And we knew Tim Sweeney at Epic because he was involved in our accelerator program, I think in 2017. And so I met with him.
He's talking about networking. This is why they hang out together.
Josh and his team
to do these things,
about what if we create a gigantic
to make these kinds of deals.
Fortnite, that could live next to Fortnite and be completely
Don't use the Lord's name in
interconnected.
vain on my
A world where people
channel.
could play games that we create, could create their own games, could watch. You can imagine the creation of short-form videos, or we may even use the platform to actually distribute some of our content. Also, the people that could interact with one another, and ultimately some form of shopping as well, and other forms of creation. Obviously, there'll be some.
No, you can start.
Digital goods, but maybe even
Get rid of
some
this guy.
physical goods. And I just think that
Just
given
get rid of
the
him.
demographic trends, and given
Thank
the
you.
success of Fortnite, and by the way, they're experiencing really a great era of both customer satisfaction and growth as they've returned to some of their roots. And the numbers at Fortnite have been really compelling. And we just think this is, just as we take our IP from our movies and our television.
Yeah, I was.
and have them expressed in
I'm
our
not gonna
parks,
say it.
This is a great way to do
I'm
it
not
in
gonna
game.
say it.
And for us,
You know what I was
we're
gonna say
get skin in the
too.
game with them, with the investment of $1 billion.
I'll tell you.
Strengthen a
But it's very
partnership
much
without
something I
getting
learned
skin
from
in
my
the game,
husband,
but also build a world
who is a
where we're
Marine.
actually not creating too much risk for the company. So as we see it, this is the best of all worlds in many respects from a business venture perspective, and certainly great for consumers who love to interact with our characters already in video game format. So I'm actually really thrilled about it. On the second, or the first part of your first question, accelerating cord cutting, understand that we're going to get paid in this new joint venture for our channels at a level that's commensurate with the level that we get paid for those channels in the multi-channel ecosystem. And so if a consumer moves out of that and then into this, then what we get paid for...
Okay, Bob, blah, 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 let it
is
go.
equal to what we get paid there. We have some other channels that are not part of this new bundle, but frankly, if you look at our company and you look at what we've done with FX on Hulu, with the Disney Channel on Disney Plus, with National Geographic on Disney Plus, we're really very well positioned to withstand, basically, the continued challenges that the multi-channel ecosystem will have. And while, there might be some de minimis economic impact on us with more cord cutting for those channels, we're backstopped in all of those channels with the content that exists or that we ultimately put on Hulu and Disney Plus. So it's, for us, it's very low risk, and actually, as I talked earlier, potentially quite accretive to us in terms of signing up sports fans that have never signed up for the bundle or that may no longer want it.
Is that on?
Okay, thanks for the question, and I want to thank everyone for joining us today. Note that a reconciliation of non-GAAP measures that were referred to on this call to equivalent GAAP measures can be found on our investor relations website. Let me also remind you that certain statements on this call, including financial estimates or statements about our plans, guidance, or expectations and drivers, including future revenues, profitability, DTC subscribers, free cash flow, adjusted EPS, and capital allocation, and other statements that are not historical in nature, may constitute forward-looking statements under the securities laws. We make these statements on the basis of our views and assumptions regarding future events and business performance at the time we make them, and we do not undertake any obligation to update these statements. Forward-looking statements are subject to a number of risks and uncertainties, and actual results may differ materially from the results expressed or implied in light of a variety of factors. These factors include, among others, economic or industry conditions, competition, and execution risks, including in connection with our business plans, potential strategic transactions, and our content, cost savings.
That's
the
really
market for
nice, lady. Now will
advertising,
you shut
or
up?
future financial performance, and legal and regulatory developments. In particular, our expectations regarding DTC profitability, subscriber levels, and ARPU are built on certain assumptions around subscriber additions based on future strength of our content slate, churn expectations, the financial impact of the Disney Plus ad tier, and price increases, the impact of bundling and availability of Hulu on Disney Plus, technological advances in paid sharing efforts, our ability to continue to execute on cost rationalization while preserving revenue, and macroeconomic conditions, all of which, while based on extensive internal analysis as well as recent experience, provide a layer of uncertainty in our outlook. For more information about key risk factors, please refer to our investor relations website, the press release issued today, and the risks and uncertainties described in our Form 10-K, Form 10-Q, and other filings with the Securities and Exchange Commission. We want to thank you for joining us and wish everyone a good rest of the day.
Bye. Okay, that's it. So I'm going to turn this off. So he is basically talking all about the sports, which he should because they're kicking ass with that. Bundling with, I think, Warner Brothers and Fox is a good idea. It's a very good idea. Yeah, word salad. Yeah, definitely word salad. I'll have to go through what they posted on the website. I think that's so funny. I mean, before I got sick, I always had sort of one of those alto voices because everybody in my family does, and then when I got sick, this is what happened. Okay, this is what I got back, and I'm almost further away from that. Yeah, like that's been a long time ago. That's been decades now. Anyway, so I'll give you my theory. We all know that Nelson Peltz has been quietly making friends with Elon Musk. Fine. They're both extremely wealthy men. They can hang out, play golf, listen to music, do whatever they want. Fine. And it occurred to me, all right, I saw this in my video. You've got Gina. Elon is helping her sue Lucasfilm. And my word of advice to everybody at Lucasfilm, stop talking about this shit. I don't care if you have a protected account. You talk about this shit, you get yourself in trouble. Okay? Free advice. Now, if you keep talking about it, that's up to you. And if you keep talking about it, that's your job, and that's fine by me. But so you got Gina here, Elon here. Then there's Nelson Peltz. He's trying to get on the board for Disney through a proxy war. We got the Blackwell's investment group. They have a lot smaller investment in the Walt Disney Corporation, and they've got 3 different people who actually do have financial and media experience. And, again, Peltz has a point. Peltz also has a point when he says, I've been on all these boards, and if you look at the companies he sat on the board of directors, he did a lot of good for those companies, okay? So it's very interesting to me, watching all this as it goes, that we've got, all right, Gina announces she's suing. The documents show up on Hollywood Reporter. If you go look at them, if you look at those documents, and if you're a member of Cameron's Patreon, I think he's got that article listed. A lot of internet issues are in the documents. A lot of I guess you call it evidence. Okay. Now, my theory is that there might be a hostile takeover in the works. Hey Dave, how you doing? Dave Pensack in the house, people. And if so, it's going to get real ugly real soon. Okay, it'll get uglier than it already is. Do I think Peltz has a chance? Well, today it was Variety, crying about, giving Bob Iger kudos and blah, 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 and going off on Peltz. And basically it was rah, rah, rah. Oh yeah, yeah, I guarantee you he's a silent partner in this whole thing. And see, all those guys know Elon. Harrison Ford's friends with Elon Musk. I mean, a few years ago, he went, that was a long time ago now, he flew to Texas to watch the launch of the Falcon, the rocket, the first time, because it's named after the Millennium Falcon. And he drives a Tesla. So, and the reason why I know that is because a reporter that was interviewing him said he came up in a Tesla, which is fine for like a place like Los Angeles. If you live anywhere like between Nebraska and Idaho, just get a regular car and whatever. I mean, because what were they saying when it got real cold a few weeks ago? Was it in Colorado? No, it was in Illinois. All of the electric cars that were out there wouldn't start, and most of them were Teslas. Guess so. But anyway, my thing is there could be a hostile takeover. That's just my feeling looking at all of this. And first off, how much Ike Perlmutter hates. Yep, Dave got it. Hates Bob Iger. I mean, they hate each other. And Ike Perlmutter's part of this. And, here's the thing. The reason why people at Marvel hated Perlmutter is because he voted for Trump. The reason why people are attacking Gina again is because she asks questions and disagrees with them. Now, it used to be a long time ago. That stuff didn't matter. But now, because people like Pablo Hidalgo feel empowered by the internet, think that they can, demand everybody kneel before their bullshit. And it's like, no. All right. Now, how does this affect Kennedy? And then I'll let you go. The lawsuit. Okay. First off, I didn't see anything that was an email. I saw horrible Twitter attacks on Miss Gina. Okay. And now it's happening to me, which is fine. I don't care. I'm not gonna scream for Elon to save me. It's really interesting to me that we haven't heard anything about the emails, but when you start seeing evidence being presented, and the Karen McCarthy case, before they removed it from the website so we couldn't see it, there was evidence. There was a ton of evidence. She has a case. Now, with Gina, if we keep watching this and we keep going to looking at the PDFs, she starts offering emails. They start off, okay. And this will happen like if she requests her, her lawyers during discovery request this evidence, they have to present it. Okay. And, they could sit there and say, we just pulled these off the server. We know that they've been out there, that they've had them. And then it becomes a government record. Then it becomes public record, official. And what they're trying to do is look, just as the case is, she was unfairly fired and she wants her job back. Bob Iger is one of the cagiest SOBs on the planet. He is not He is not one of those guys he's not woke. There's nothing woke about him. He's just a politician, like Nikki Haley, okay? I'm sure tomorrow she'll say, I'm now a conservative again, and start spouting stuff that made her kind of cool, okay? Iger will likely settle this quietly behind the scenes and let Gina come back to work, which is what he should do anyway. And then you will see heads explode. Wait, look, I'll let you go with this. X it's the number one app on, I think, Google Apps now. And, they were talking about that. Well, they can say that, but was she? I mean, we really don't know how that went down. And she said outright she was fired, okay? They denied her work, for Rangers of the New Republic. And, it was basically, look, Gina's not the target. Jon Favreau is the target. It's obvious to me from the moment I heard about this that they were going after him because he wanted to fix what was broken, which is the fucking sequel trilogy. All right. But I'll leave you guys with this. Okay. Watch what happens and see what's going on. I do think that she'll probably just come back to work. They will come up with something, and this is a way to force it. Okay, this is a way to move it forward, and and if she's announced that she's coming back to be in the movie, then
It's already a done deal.
what?
Already a done deal.
Then you think it's already a done deal?
Did she say she was coming back in a movie?
Well, she wants her job back. That's all she wants. I just said, if they announce that she's back,
All right, well.
she announces
All right, well.
if she announces that she's back, or they announce that Gina Carano has been re-signed to join the Lucasfilm to be part of the Mandalorian cast again. If that happens, will we even need an announcement that Kennedy's gone? Because she's not going to go near that place until that creature's out the door. Okay. And there you go. Yeah, he is based. That's why I married him. Anyway, all right, I gotta go because I gotta eat and I want to have a glass of wine and finish cleaning up my kitchen. It looked like an Italian lasagna cooking bomb went off, but we'll see what tomorrow brings. And no, she doesn't want my outright. She wants her job back. So you guys have a good evening, and who knows? Well, I might be back later going, this happened. So you guys take care, and to my wrenches, thank you for showing up. All right. The trolls don't bother me, and I know I'm over the target with what I'm doing right now because somebody's got to call these people out. Somebody's got to, wave at Iger and Favreau and go, he's talking about this to somebody. Should he be allowed to talk about this to anybody? All right. Probably no. Okay. Probably not a good idea. Probably should be told, this is an ongoing court case, dipshit. Anyway, I gotta rock. You guys behave, be safe, and you know what they say, see you around the galaxy. And the sequel trilogy sucks.